discuss some more earnings, and we've got Mr. Muthu Murugappan, the CEO at EID Parry, joining in on the show right now to talk about how their quarterly performance has been. Muthu, hi, great to have you today on 18. I was just looking at your performance. Your Q1 EBITDA loss has widened now to 48 crore rupees from a year ago, and PAT loss as well is more than triple to about 89 crores. Tell me how much of this was actually the El Nino driven weather disruption versus perhaps structural pressure?
Hi, good morning, Aisha. Thank you for having me on the show. So Q1 was a challenging quarter. On the sugar front, prices were range bound. So this was, I would say, a steadier segment. On the distillery front is, I think, where we have seen some challenges. The challenges have been multifold. The first challenge is really cost pressure partly on account of the rising of input costs. Also, we are having to in-source a lot of feedstock because of lower cane availability in the state of Tamil Nadu. So this has impacted cost. Also, I think in Tamil Nadu, we've had lower offtakes of ENA, and this is on account of some local issues and lower quotas. On the ethanol front, we've largely met our tender commitments. So this is what has challenged the distillery segment. More broadly, we are seeing lower cane planting in Tamil Nadu, and this has been a challenge for, say, the last 2 years. There have been some incentives which the government has announced, so we have to see how this pans out going forward. In terms of the El Nino impact, June was deficient in terms of rain, but we have seen a pickup in July as well as in August. I think it'll be very important to see how the rest of August and September pans out, not just for this year's crop, but for next year's as well.
Right. But if I just want to, break up all these points one by one. I mean, let's talk about sugar first. The price is currently around 45 rupees per kg. That's definitely making sugar, more attractive than ethanol diversion, right? If I can understand this correctly. But how long do you think this economics is going to hold out? And does that then change your cane allocation strategy going forward?
So Aisha, the first quarter sugar prices were more range bound. We have seen perhaps from July week 2 onward, sugar prices starting to move up quite significantly. This is on account of, as you said, El Nino concerns, and also perhaps closing stock level. The sugar year finishes end September, closing stock levels of about 4 million, which are quite low when you compare to the last couple of years. So this is one reason why pricing has moved up. Typically, when the crushing season starts, and it's very likely that the crush will start a little earlier in October this year, we should see prices correcting. But at the current levels of pricing, it does help the industry. The industry, as you know, has seen increase in input costs, and it does see an upward revision of FRP, which is the price at which the industry sources in sugarcane. So to this extent, it should certainly help the industry.
But how confident are you about Karnataka's cane availability, and what's the contingency if that doesn't go through?
Aisha, Karnataka's cane availability looks good as of now. The back half of the monsoon is important in terms of ensuring that yields are in the right place. I mean, any dip in the next 6 weeks in terms of rainfall will negatively impact yields. It will also negatively impact the planting sentiment for next year.
Also trying to understand how consumer product group will behave going forward. There's obviously been a strategy change there where you're more focused on profitability. Just kind of give us the perspective. Top line will remain soft is what you've guided for?
Yes, the focus is certainly on, improving profitability, on, more value-added products with a stronger gross margin profile. So we have, done away with parts of the business wherein the margin profile was extremely low. So this was a, deliberate and purposeful recalibration of the strategy, as you have mentioned. Beyond this, the focus on the consumer product group will be on expanding GT distribution. We have a good organized trade presence in the southern markets, but the focus will be on expanding GT distribution and in terms of launching new products as well and strengthening brand equity.
What does that do to top line and profitability? If you can just give us some color on that in terms of what we can expect going forward, FY27 and beyond.
So, we don't give guidance, but certainly our contribution margin pools are improving. And I think we will see an upward improvement in the absolute contribution margin pool going forward. So I think the quality of the business and the business model should certainly improve.
Growth, is that the right way to think of this? And if so, how much would that degrowth be? If you can give us some color.
So top line is likely to degrow from last year on account of the choices that we have made. We will perhaps see a 20 to 25% degrowth in the top line of the consumer products group when we compare to last year. But as I said, I think the absolute margin pool should significantly improve.
The other thing, Muthu, I also want to touch upon is the new Karnataka jaggery plant, which you said was going to come online in the next 6 months. Wanted to understand because, now your margins, it seems, are much higher than white sugar as well. What kind of margin profile are you actually underwriting from both these plants?
So Aisha, with products like jaggery and brown sugar, these are significantly margin accretive. I mean, sugar is commodity margin, so you can really be in the single digit, sometimes in the mid to low single digit. When you get to jaggery and brown sugar, these are more akin to food FMCG products, gross margin profile. I wouldn't like to discuss numbers in specific, but this has been the focus of the business to really shift the product portfolio towards a much better gross margin profile. And we certainly do see that with the browns category and hence the investment in the jaggery plant. We do have captive capacity in Tamil Nadu. This is expanding with our Karnataka operations as well. Here we're investing for the future with these two plants and with perhaps some third-party manufacturing partnerships. We should be good for the next 3 to 4 years in terms of our jaggery feedstock availability.
And what about nutraceuticals? Because that's facing softer spirulina demand as well, from what I understand. Yet you're saying that FY27 could be a record year, perhaps, potentially. What is giving you this confidence?
So Aisha, we look at the nutraceuticals business. The Indian part of the operation is the smaller part. That's where we farm and process the spirulina. That has seen plateau to soft demand. It's largely exported. I would say the lion's share of the nutraceutical segment is based in the US via a wholly owned subsidiary there, where we make a number of botanical extracts and formulate them as well. That business has seen a strong first quarter, and we look, I think we're looking ahead as well to have a strong year on account of 2 new product launches, as well as good strength in the existing product segments as well. The margin profile of that business, because of the new product launches, is also significantly strengthened. So we're quite positive on this segment for this year.
Okay. Muthu, just therefore trying to understand with regard to nutraceuticals, how will growth largely be? And just if you can give us the kind of mix it will start to command once it starts getting larger and more meaningful?
So as I said, we don't give guidance, but we should see healthy growths on both the top and bottom line in the consolidated nutraceutical segment. And this should really position the segment well for value creation.
Okay, Muthu, looks good. And good luck with the future quarters ahead. I'm sure we're going to speak soon.
Thank you, Aisha. Thank you for having me on the show.